Today's a little later in the day. It's 8:04 a.m. I don't know why my alarm didn't go off, but we're gonna see if we can find anything today. So we had the first news come out at 6:45 a.m. Second news at 7 a.m. We're gonna see if we can still find a trade today. You can see we had 6:45 right here, then 7 a.m. right there when news came out. What I'm looking at here is our equilibrium right here in the middle. Right now we're in a discount, which means it could be potential for buys. Up here we have a premium, so we could have potential for sells. This yellow line was that 1 week fair value gap level that we had drawn out from yesterday from ICT. And right below it, this low right here is right below the equilibrium for that fair value gap. So I'm predicting that price could come down to this black line, sweep those lows before coming back up to equilibrium. Alright, so we're about to come down and sweep that 15-minute low. If we come look at the 15-minute, we see that all the way back here, we had this low created, this black line, and on the weekly, the fair value gap that we were looking at before, the top of this yellow line, all the way down to that bottom weight. That fair value gap, we're at equilibrium right here at the midpoint. This line is right beneath equilibrium. So I'm thinking that's a potential place for it to come back up. Right here on the daily, we see a small fair value gap right here. Very small gap on the daily. So another place it could potentially come down to. Let's look at the equilibrium for the whole move up on the daily. It's a little further down, all the way down here. So we could come even lower, down to these lows, even down to this fair value gap. But yeah, these lows could be the draw for liquidity. So it's a 1 day low within this kind of equilibrium. And on the 1 hour, it looks very smooth down here. Even this one down there. Let's go back to our 1 minute chart. Alright, so we hit that level I was talking about. Started coming back up again. Created a lot of fair value gaps. We just touched into one of them. I'm looking for potential long all the way up to equilibrium. Right here we see a prominent high right next to equilibrium, so I would target that. Stop loss underneath that fair value gap. And we'll enter right there. So again, swept out this low. There was a prominent low down here inside of equilibrium for the 1 week fair value gap, right beneath it. We came down into that discount, started coming back up. Fair value gaps all the way up. Touched right here above halfway mark. Closed up here. So our stop loss is going to be beneath that fair value gap. My first buy trade for the account too. Every other trade has been a short position. It was a long. So we got fair stop loss right here. That fair value gap. Take profit at this prominent equal high. These equal highs right here. And it's right next to equilibrium. If you look at the whole move down from today, that midway point's right there at the same level of that high. So I'm going to target that. We have these two equal highs right here. And like I said, I learned that equal highs on the 5 and 15 are more likely to be hit than on the 1 minute. So right here we see that these 1 minute equal highs, this would be the first high in the equal highs compared to this one. So I'm expecting price to at very least come up to these levels. And that one on the new week opening gap. That could be potential take profit if I see signs for it coming back down. Then on the 15 minute, this is our only high on the 15 minute. On the 5, this is the one I targeted for my take profit. And that's because it's right at equilibrium. and it's a 5-minute high. We're up here again at the top of this fair value gap on the 1 weekly. Here at our potential take profit 1 right here. Just got hit. So I will be looking at the position because it's later in the day. So I don't have as much confidence I can go all the way to our take profit. I might close out early. And I would be doing partial closes, like close part of the position, keep part of it open, see if we can go to the take profit. But I'm only trading with 0.01 lot, so I can't do a partial. There's nothing I could close it by. There's already the lowest amount. So we're coming up to our second take profit right here. Second potential take profit. That one's been hit now. But again, overall for the day, for when we opened at 6:30, we are still in a discount. So that's good for buyers. Still have a buying market. Our next potential take profit, we had said, was right here. I'll make these green. I see a lot of fair value gaps created on the way up. So that's a good sign. Oh yeah, and this trade was right here. Potential $25 risk for $175 reward. Potentially. We lost connection right here to the internet. I don't know why. What happened? Alright, we lost connection to the internet for a second, but we're back. Right here we came down. There's this fair value gap we were looking at. Depending what it does on these two fair value gaps, I will decide if I'm going to close my position or keep it open. I don't like the way it is coming past the halfway mark here. This first one closed at least above the halfway when it closed. But the second one might close beneath. We're about to see. Three seconds. We closed right beneath the halfway mark. Barely beneath it. Alright, our last fair value gap right here. We're going to look at what happens here. And we might close it on this one. Unless we can come back up. On the 5 minute, this is our first fair value gap, so could be coming back to this level. And equilibrium is right around that yellow line from that 1 week fair value gap. I'm gonna make this one blue. I'll make it red so you can see the difference. Alright, we're in that 1 minute fair value gap. Coming down. Yeah, smashing through this. Absolutely smashing. 40 seconds for this candle close. Let's see if that's all it wanted to fill. Let's look at the 15 as well. 15 minute. Okay, so on the 15 minute we have a bigger fair value gap. It's this whole area right here. So it came down to the middle line on the 5 minute fair value gap, this red one. Closed right beneath it. It came down right outside the fair value gap. And we came back up a little bit. We had this downwards fair value gap created right there. So right here we're looking at the 1 minute fair value gap between these three candles. I'm looking at where it goes within this area. The wick touched right at the middle line. It's 8:49 a.m. right now. So wick touched right at the middle line. That's good. Now we gotta see if we can come back up into this fair value gap, what it does here. We want to see it come above the halfway mark. Oh yeah, we're definitely gonna bring stop loss up to break even. So we're not losing any money on this trade. We're back up in this top fair value gap right here. We came up above the halfway mark. We'd like to see that. And now we want to see a closure all the way above. So I moved my stop loss up, so even if I lost the trade, if it went down in my stop loss, I would still make $7. This would be profit for the potential bigger profit target of 175. But if I see signs of it coming down, based on the way it reacts on these fair value gaps, I would just close the trade right here for my profit that I have currently. This is a sell side fair value gap. We'd like to see us come above the midpoint again on this one. We did close above halfway on the buy side fair value gap. And since we're so close to our new week opening gap, I feel like we're going to come back into it. Because we have these highs right here, these prominent highs. And they're right next to that new week opening gap. We had another little fair value gap on the upside created right here. Alright, we came all the way through that fair value gap that was just made. So I might possibly close the trade right here, depending on where this closes. Got 15 seconds on this candle. Alright, we're just going to close the trade right there. That means we had a 1 to 1.7 risk to reward ratio. Again, we were risking $25 and we made 48. Alright, so I was editing the video. I took a look back at the chart. to see where the price went, and I saw kept coming up all the way to this new week opening gap, up to that third take profit level that I had set. I'm gonna go ahead and get rid of the bottom two. So I had left this big fair value gap right here, touched above the midpoint, came back up down here. We came back again and touched into it, closed up here. So that was my entry. Entry right here. Stop loss down here beneath that fair value gap. Take profit again at our original level. So our original take profit from the first trade. Targeting equilibrium, that high right next to equilibrium. Once we come back up higher into profits, I'm gonna move my stop loss up to break even. So this trade right here, with my entry, was risking $30 to make 116 potentially. We did create another fair value gap up here. So depending how we react on this one. We got these two fair value gaps right next to each other. I don't like the way that it went right through this first fair value gap and just disrespected it. But we're inside our entry fair value gap right here. We're paying attention to what happens at this middle line. If we can stay on the top side or if we come down to the bottom. Oh fuck. Yeah, we just got stopped out. Big ass move down. That's okay. Alright, so yeah, we just got stopped out. Looks like it's gonna keep dropping. So this trade was at 9:30 a.m. So even on days without FOMC, I gotta stop trading earlier in the day. Today I woke up late, so I'm used to taking 2 trades as normal for me. But it was later in the day, so should just stuck to that first one. So overall, for today, these are my 2 trades. First one 148, second one lost 30. So overall up 18. We can look at the account. Right here we have our average loss of 15, average win of 47, 50% win rate. Our remaining profit target is 164. That's how much we have left until we pass. Alright, so lesson learned from today. Even if there's no FOMC later in the day, if there's no high news event to avoid, I still should stop trading at the very latest at 9. Because our first trade played out before 9 o'clock and it still hit. So at 9 o'clock, I'm going to get off the charts, not even look for another potential trade. Our first trade went well, so the only thing is we adjusted our take profit from our original up here to down here.